Hello, I think we can start now. Uh, so good morning, good afternoon, or good evening, depending on your time zone. My name is Małgorzata Kobyszewska, and on behalf of the Students Banking Law Association, Students Organization for Law and Economy of China, and Warsaw Beijing Forum, I am honored to welcome you all to the event titled People's Republic of FinTech, FinTech Sector in China. I think we'll have a form of a panel discussion concerning Chinese financial technologies, and we'll have a chance to listen to high-profile experts associated with Polish and institute, who I have the pleasure to present to you. And the meeting will be moderated by Dr. Michał Nowakowski, who is a legal counsel at one of the financial institutions with expertise in artificial intelligence and other new technologies, and the owner of a blog about new technologies and regulation named FinRegTech. He is also the author of the book FinTech, Technology, Finance and Regulation, Practical Guide for FinTech Sector, and a member of the Legal Tech Commission of Warsaw Bar Association. He is a member of the Artificial Intelligence Working Group within the Minister's Office in the area of law, ethics and financial sector, as well as the external act in the project for the development of the FinTech legal framework in Poland. He has also significant experience in the public sector, including the International Monetary Fund and the European Central Bank and Polish regulators for the financial sector. So, welcome, Doctor. And the next speaker, who I have the pleasure to introduce to you, is Professor Douglas Arne, who is the Career Holdings Professor in Law and Director and co-founder of the Asian Institute of International Financial Law at the University of Hong Kong, as well as Associate and Faculty Director and co-founder Master of Laws in Compliance and Regulation, Master of Laws in Corporate and Financial Law, and Law, Innovation, Technology, and Entrepreneurship programs. Professor Arne has published 18 books and more than 200 articles, chapters, and reports on international financial law and regulation, and has served as a consultant in many global financial institutions. He has been a visiting professor at many universities around the world, which I don't even dare to list right now because it really takes ages. So welcome, Professor. We are also pleased to welcome as a speaker Professor Laura Xiaolei-Yu, a Boya Distinguished Professor and a Professor of Finance and Accounting at Guangzhou School of Management at Peking University. She is the chair of the Department of Finance and Guangzhou School of Management and director of Blockchain Lab and FinTech Lab. Her research interest is capital markets and empirical corporate finance. Her work has been published in leading academic journals, including Journal of Political Economy, Journal of Finance, Journal of Financial Economics, and many more. In recent years, she has focused on fintech-related topics, including blockchain. Before joining Guangzhou, Professor Yu taught at Hong Kong University of Science and Technology and received tenure there. So welcome, Professor, as well. And today we also have the pleasure to listen to Filippo Addari, who is a founding partner and CEO of Plazo, a London-based advisory group specialized in the design and implementation of urban innovation ecosystems. Filippo is a serial entrepreneur and strategy advisor with 20 years expertise in leading on innovation projects, combining sustainable development and social impact, multi-stakeholder approach. He worked with the EU, UN, and UK governments, major corporations, and philanthropic foundations. He is a founding partner of Urban Impact Fund, the first impact investing fund dedicated to new solutions for urban living in regeneration projects. So this is the end of the introduction that may have seemed a bit long to you, but I assure you that it is only a small part of what will be said about our experts. So once again, I welcome the speakers and the listeners, and I encourage everyone to write your questions down in the chat box, as it is a unique opportunity to gain knowledge in the field of fintech from such distinguished experts. And Dr. Nowakowski, the floor is yours.
Thank you so much, and thank you all my participants for joining us. So today we're gonna talk about fintech sector in China, but we have also a great opportunity to talk about the differences and what we have in common with the European Union, because right now we are framing or creating our framework for example, artificial intelligence, also for the financial sector, but also other areas and other new technologies. Yeah, sorry. So when we are thinking, could you wait a moment? Sorry. Really sorry. Uh, So when we are thinking about fintech, when I was looking for some books about fintech, I found few positions. One is Digital Human by Chris Skinner. Another one is Kai Fu Lee. It's about artificial intelligence. And the third one is about cashless society and China's digital currency revolution. So it seems that people around the world are looking for some kind of solutions that were developed in China. China is currently one of the most biggest markets and also one of the biggest markets when people are using cashless. Yesterday, I was reading an opinion by Advocate General for the European Court of Justice, and he said that for the European Union, it is not obvious that we will become a cashless society in the near future. Of course, it could happen, but still, there are some obstacles for the European Union as a whole to become a really cashless society. So I would like to answer some questions about how China became a really cashless society, a really fintech, let's say, a global leader, and also what can we take from China and from fintech sector and implement it in the West. So. I'm gonna ask first Professor Douglas Arner. So, if you could describe a little bit how fintech sector or payment sector in China is looking, because when I'm looking for information in the internet, I can see that there is a lot of options like QR codes, like biometrics. We are getting so excited here in the European Union that we can pay by biometrics, for example. The European Union, the European Commission is developing, let's say, a framework for QR codes, unified QR codes, that should be done around 2024, which is far from now. And in China, it's something really, really common.
So, I mean, I think when we think about China's financial sector, if we think about digital finance in China, China has, beyond a doubt, one of the largest and most digitized financial services sector. If we think of the sort of headline of the two main mobile payment services, Alipay and WeChat Pay, frequently suggested that each has in the neighborhood of 1 billion customers. But in addition to aspects of online payments, all sorts of well-developed services, particularly in the context of lending, investment, insurance. And I think it's probably worth thinking a little bit about the context. How and why did this happen? And if we look at China, say 10 years ago, China's traditional financial services sector was not very effective at many things. In particular, it wasn't very effective at getting financial resources to small and medium sized enterprises. And over many years, lots and lots of discussions about how to approach this problem of access to finance for the private sector, and particularly for small and medium sized enterprises. And in the aftermath of the 2008 financial crisis and a range of other points, we see in China the beginning of an experiment with digital finance and an approach whereby over the 10 years between really 2010 and about 2019, 2020, we see probably the most rapid and comprehensive digital financial transformation of any financial system in history. And probably the big reason for this, one can say a number of factors. The first, the opportunity to leapfrog. China's existing financial system, its existing payment system, didn't work that well. And so the opportunity to use new technologies. And that's the second point. The second point was very widespread access to mobile phones, particularly smartphones, and the mobile internet, and a large physical area combined with traffic issues, which incentivized its use. The third was really around governmental approaches, a sort of approach whereby the government took a permissive approach. And I think what we see is this combination coming together to lay the framework by around 2015, 2016 for a highly digitized financial system, which from that basis over the next 5 years has continued to evolve.
So we can say that this was a real revolution or a disruption within the sector, right? Because we had, let's say in China, we had legacy systems, for example, for IT infrastructure. And as I understand, they completely reframe all the infrastructure, all the, and also the approach to the finance, right? Am I right?
There's two sides of that. One, of course, is that China only really began to redevelop its financial sector in the modern period in the 1990s. So if you think about the development of the stock exchanges, they were digitally native from the very beginning. If you think about the interbank bond market, the primary interbank trading center that was digitally native from its very start. And China, in many ways, wasn't burdened with legacy systems like checks or bills of exchange, which have been characteristic of other economies. And similar to what we've seen in a number of other places around the world, that constraints around fixed line telecommunication and existing infrastructure meant that there was an opportunity to essentially leapfrog from fixed line structures to mobile structures. And once those mobile structures were in place, that then also provided the infrastructure for digitization of financial activities, starting with payments.
So it seems it's like the problem with the traditional banking in the European Union. We have when we have, let's say, really old infrastructure for that, and we should do something with that. Like, for example, we are looking for a disruption. So my question to Professor Xiaolei: what is the let's say the relationship between the fintech sector or a big tech sector, if there is a big tech sector also in China, and the traditional banking in China? I'm really interested how let's say startups, fintech startups, are entering the market, how they compete with the traditional banking, which is have tradition, let's say, and also a really great base for with of the clients.
I think it passes through several stages. At early stage, these two parties play their own game. The traditional bank commonly provides services for big customers. We say it's a 20-80 rule. So they service this 20% of the customer, the big customer, and they don't care the other 80%. And for those, you said in your word, a big tech firm, BATG, for example, because they have the advantage of big data and they have the SIM, so they can get access to those small, we call it a long tail customers. And they can also do the risk control because they have get access to the data of this customer. So they can provide a service, for example, the loan service, like what Ants Financial has been doing. It used to be Ali, and later it spin off became Ants Financial. They provide loans to this really the small shop owners, so-called 310, 3 minutes application, 1 minute granting, and 0 human intervention. So those customers are not really the traditional customer for the traditional banks. So in the early stage, these two groups, I would think, they provide service for different group of customers. And in recent years, actually, it's also encouraged by the government. Hope these two can be more collaborate, helping each other, and hoping these big tech firms can export their technology and help this traditional bank to do so-called digitalization transformation. So actually all the big tech firm form so-called strategic alliance with the big four firms, big four banks as well. And so they have some collaboration and help the big banks to improve their technology. And also, probably more importantly, they use big banks' capital, because once they provide these financial services, these big tech firms, they have the technology, but they don't have money. They cannot attract the deposit as the traditional bank does. So most of their service, they still using traditional banks' money. So that's kind of their relationship. It's still evolving. It's both. It's more like a complementarily, in my opinion, complement each other. Yeah, Michael.
Okay, thank you so much. So it's all about financial inclusion at the beginning, and then it's about collaboration. This is how I understand that. That's great. It might be difficult to achieve the same level, let's say, of fintech advancement of the market in the European Union, but we'll talk about it later. So my next question is to Dr. Adani. And also the next question after that, I would like to ask Professor Arner. So my first question is, how about the framework for operations of fintech in China? I mean, what are the challenges for adapting fintech, let's say, solutions or paytech solutions, whatever? Also, artificial intelligence, if you could add something, in China versus EU countries, because it's really interesting topic. Because when you think about the legal and regulatory framework for the European Union and new technologies, we can see that it's based on, let's say, some principles, some values, some fundamental rights, things like that. And the data protection is really at a really high level. So my question is it the same in China? Probably I know the answer, but I would like to hear that from you. And my next question will be to Professor Arner about, let's say, the relationship between regulators or regulator and regulated entities, and how they cooperate, if they cooperate, or how is it how are these regulated entities are supervised, and are there any kind of let's say solutions like subtech, for example, or regtech, to help companies in China to, let's say, evolve?
Sorry, Michael, I haven't understood. Was the first question for me to start?
With you? Sorry. So yeah. So
I got confused.
Please,
sorry.
Yeah. Sure. Could you please describe the challenges for fintech in a broad sense? I mean, like artificial intelligence, paytech, blockchain, cloud services in China, and if you could compare these challenges to the European Union countries.
So I will actually start with Europe, because that is the geography I know very well. And but by the way, I will start with an example coming from Canada that illustrate very well what's happening in Europe. The most, as you mentioned in the introduction, my focus is in urban transformation. So I tended to look at fintech as one component, a driver of change in an urban context. We are talking about large chunks of cities started from scratch, redeveloped. and the fintech is the financial angle. Now, one of the most important, largest projects in the world happened in Toronto, waterfront Toronto, the redevelopment on the entire, stretch of land facing the lake. And that is a revealing case about the tension of bringing digital innovation, and in particular, the layer also of fintech in that case, when you redesign the city. Now, the case was not about a Chinese company. It was about Google, in particular about Sidewalk Labs, which is a company owned by Alphabet, which is specialized in urban transformation. That was actually the first time Google ventured into that space. And they won a contract with the Canadian government and the city of Toronto to really redesign, I'm quoting Dr. Doctorow, the CEO, the city from the internet up. So essentially redesigning the entire chunk of Toronto based on internet, in which a company like Alphabet, as I said, controlled by, Sidewalk Lab, controlled by Alphabet, would have redesigned entirely the material part of the city, but also own all.
Oops.
Looks like we may have lost Filippo.
Yeah, I think so. Yeah.
Well, let me jump in on that question, Mikkel,
Sure.
because it's something that my team is spending a lot of time on, this sort of comparative issue. And, it's something that when we think about innovation and competitiveness in the 21st century, core to this is data. And I think this will give Filippo a chance to come back in a few minutes. When we think about this idea that data is really core to innovation and competitiveness, then the question becomes, how do we go about maximizing the benefit of data, enabling the use of data for AI and other purposes? And one thing that we know from the standpoint of AI is that AI tends to perform better the more data it has. And so we're seeing a variety of different approaches evolving in different places. So if we look at the US has taken an approach whereby data, particularly personal data, is essentially freely alienable property. And that has enabled consumers, users, to transfer their data, often freely, for all sorts of services. And that has enabled essentially private companies to amalgamate, to aggregate large volumes of data. And data is an industry that we often characterize as an industry which benefits from network effects. The more data you have, the more users you have, the more benefits to everyone. And essentially this means that, like financial services, it's an industry that benefits from economies of scope and scale, which means there's a natural tendency towards concentration and even dominance, what we sometimes talk about in the context of winner takes all outcomes. And that is exactly what we've seen happen in the United States. That is one model whereby you are able to aggregate data to maximize its usability and consumer benefits. The downside of that, though, is that at a certain stage, concentration and dominance actually reduces competition and innovation, and it may likewise increase inequality, all of which may be undesirable outcomes. It also raises questions for other countries about the use of these sorts of data resources in their own sectors. And as a result, we've seen the EU over an extended period develop an alternative approach both out of competitiveness, but also out of cultural differences. The EU's data approach is one that is more rights-based. In other words, a piece of personal data, you can allow a business to use it, but at the end of the day, it's always yours. And essentially, this is designed in some ways to protect data of individuals. It's also a way to combat agglomeration by private sector companies in the context of walled gardens. But it has the challenge of how do you then go about enabling the use of this data more broadly from the standpoint of aggregation for AI and other purposes. And we see issues around that in the context of the EU's approach to open banking, basically requiring allowing use of data. And we see in the EU's new digital finance strategy from 2020 an expansion of this approach beyond just banks sharing of data to much broader sharing and availability of data across the financial services sector. And I think this is a model that has a lot of attraction, but in many ways it requires a lot of data infrastructure to enable both protection and sharing that I think is going to be a challenge for a lot of jurisdictions that are less developed. China, I think, is still struggling with this. And if we think about China's approach to data, we think of historically, it's actually been in the private sector side rather similar to that in the US. That individual data has been transferable, and that has resulted, as in the US, in large agglomerations and concentrations of data in the big tech and in the big financial and tech companies like Ant or Tencent. And I think increasing questions going forward, both around use of data by the private sector, but also how can you go around to get the public benefits of data aggregation to support AI, which of course is a national strategy. And I think lots of discussions around this question, including possibilities of actually separating those privately acquired data pools into separate entities, which can then be accessed by a much wider range of participants. And so what I think we're seeing developing across major economies are different approaches to this challenge of what is data, how can it be used, and in particular, how can it support innovation and competitiveness? And for the rest of the world, this is going to be a challenge.
Exactly. That's a really good point, because if you look at guidance, for example, for virtual voice assistants made by the European Data Protection Board, you can see that, for example, you as a developer, you are responsible for ensuring all the rights, data protection rights, for also silent parties. It is the same thing for the open banking, for the PSD2 guidance as well. So it might be a great challenge for companies to ensure, let's say, the compliance with all the regulations. But Dr. Adari, the floor is yours, because we have interrupted you. So because
Douglas, thank you for saving the day and also expressing the concept more effectively than me, definitely. And I just want to build on that because the question about the right-based approach and the public good is fundamental for the development in Europe. My actually field of expertise and interest is financial inclusion, as Laura mentioned, because that's the way really to expand the fintech. Don't forget that what we have seen also within the European context is major banks being, I would say, indifferent to or hostile to these developments, because they see this as a major threat that rather than joining in, they have been, in some cases, very effective in at least slowing the process. But if we look at the financial inclusion and the public benefit, then the question of fintech is not a technological issue anymore. fintech becomes a means to an end, and the purpose will drive the expansion. Therefore, I think that within the European context, the fintech development has to frame within the broader Green Deal sustainable finance, and within sustainable finance we have the green finance and the financial inclusion. And that's a way to get it, both with the policymakers and also the existing financial institutions. There is a further layer, and this is coming up right in with this this year G20. It's a COVID, or the consequences to COVID, or the awareness that we need a digital infrastructure to respond more effectively to COVID. And that boils down to digital identity. And again, a fundamental question within the legal and political European framework. Something that was, as a digital identity, somehow very controversial, we have seen an acceleration, and at the next G20, so we are talking about October, we will see a very strong proposal for introduction, again, presented as a response to COVID, the threat of COVID, the future pandemics, but clearly building an infrastructure that then fintech will be able to use.
Thank you so much. That raises also another question, because we are talking more and more within the European Union about cash, let's say returning to cash. For example, just yesterday in Poland, the proposal for the obligation of the acquirers to accept cash was introduced. Actually, it's not yet adopted, but we received. It was published in the official journal, not journal, sorry, but on the website of the Parliament. And that's the one thing. In Germany, there is a discussion about the role of cash in the society. And my question is here, whether do we really need or do we really have some kind of financial exclusion within the European Union? Because my understanding was that we are really, really advanced when it comes to access to finance for customers. But that made refer to the consumers, but not, for example, for the corporates or SME, right? So if you could, Dr. Adari, tell us something more. Do you really think that we have a financial inclusion within the European Union? This is the let's say the area that should be somehow adopted by fintech sector in Europe.
So well spotted. SMEs is actually the big problem at the moment, because I simplify this. Following the global financial crisis, the European Union has started legislating ferociously in order to put in order the capital market, essentially making and we don't question this, we don't enter, essentially making more difficult for SMEs to access finance. And when we talk about SMEs, we are talking about over 90% of the real economy. So it's not just an economic problem, it's also a social problem. We are talking about the majority of workers in Europe, social and political clearly. Now, with the combination of the Green Deal and all the related policies that ultimately are increasing the burden, but also the access to finance, plus COVID, which had a hit on the activities of those SMEs, essentially the that is the weakest sector of the economy in Europe, and it has been totally overlooked by the regulators and the policymakers. Again, what we see because of this exclusion, especially by the mainstream banking sector, what we see as an emerging opportunities for fintech is access to finance targeting SMEs. And that is also the linchpin between the mainstream financial institutions. Actually, some of the top banks have made some first acquisitions exactly in this field. Knowledgeable that the usual banking system is not able to serve the SMEs, is also essentially uneconomical for many banks to just borrow. Fintech is the only way to go. So that is also another area to keep an eye on. At the moment, it's somehow small, but the real opportunity within the European context.
Thank you so much. Let's jump to China right now. I think that we are all waiting for this topic. So I'm going to ask Professor Chalet about CBDC, central bank digital currency. For past few years, we were developing a lot of articles, a lot of publications about CBDC, but there were no real, let's say, examples of implementing CBDC. And then China decided to do the first step to introduce CBDC. Of course, it raises a lot of questions, for example, about the model that was proposed by Bank of China, which is with the expiry date and let's say the consequences of that, and also about the goal or the purpose of the CBDC with the expiry date. So I would like to ask you about your view on digital RMB, and also if you could add something about other, let's say, proposal, other projects around the globe about the CBDC, and if you could compare it, let's say, just to add one thing, one week ago here in Poland, there was introduced a really long report by the Central Bank of Poland, Narodowy Bank Polski. The conclusion is that right now, here in Poland, we don't need CBDC. The existing infrastructure is effective, and we don't need it in the near future. But of course, the central bank will monitor and react if necessary.
Okay. About the CBDC, we call it the central bank digital currency. Currently, it's on a trial, a pilot program in a few cities. If a simple way to understand it, we could simply understand it as a central bank's Alipay. So Alipay is the ones made by Alibaba, and now we have Alipay by central bank. And the usefulness is still is a replacement of the M0, so replacement of cash. So you can just, as you're using Alipay, you make a small payment as a ticket or something, and instead of using your digital wallet in Alipay, you just make that payment using this CBDC or digital currency by the central bank. About the expiration day, personally, I don't think it's possible. And since it's a replacement of M0, I mean, it's cash is yours. I don't think the digital currency with expiration day is possible, is feasible. Sorry, what's the last question? That's the first two I remember.
If you could add something about other initiatives around the globe about the CBDC as well.
Oh, sorry.
Yeah.
Okay. There are some discussions because currently this pilot version of the central bank digital currency is by account. That's why I said it's a central bank Alipay. So you have to have a bank account, and then you have to have a bank account. Then you have a digital currency account. So you can transfer your money from your original bank account to this digital currency account. So there's no like it's not very innovative or it's
Okay.
not a big step. There are some talking or suggestion about making like a Bitcoin type of digital currency. It's not what the current CBDC is, but there are some suggestions. There are some discussions about whether it's possible to have a real on blockchain, some Bitcoin digital currency, which means the digital currency based on token instead of by account. That's what we have currently. And also there's some discussion about the stable coin and the similar. So we can have a coin which is on blockchain, not like what we have right now. It's a bank account. It's just similar as Alipay. So there are some discussions, but I don't think there are moving forward. They're still limited to discussion proposal. Yeah.
Yeah. I completely agree with you. I think that we are not ready for that, and also we don't see that many benefits actually of introducing CBDC at the moment, because we have to take into consideration that introducing CBDC would need some kind of amendments to the local law and also to the infrastructure, operations, education, and things like that. Because if you would introduce CBDC like for a general purpose, I mean, for also for consumers and for the wholesale, you might create some kind of financial exclusion, right, or digital exclusion at this moment. So that's a very good point. Professor Arner, I would like to ask you, because I think I did, but I would like to ask again about the relationship between regulators in China and the regulated entities, and how do they cooperate, how do they coexist, and how does the supervision looks like, and also are there some kind of initiatives like sandboxes that could be used for also Western companies if they would like to enter the China market?
Yeah, if we think about sort of regulatory approaches, we can think of a spectrum from very permissive approaches to facilitative approaches to experimental approaches like sandboxes to essentially structured, legally based structures to prohibition. You can think of prohibitive structures in the context of financial services innovation as well. And if we think about China's approach to development generally, certainly to development historically in the financial services sector and very much in digital finance over the past decade, China's approach is often one that is based on pilot experiments. In other words, you allow a certain type of experiment or approach in a limited area, and you evaluate that. And if it's successful, you expand it. And if it's unsuccessful, you close it down. Maybe eventually you build a broader legal framework to support a broader rollout over time. And so China hasn't used this idea of the regulatory sandbox per se, but it has used lots and lots of different pilots, including in digital finance and a range of other areas, which have a similar sort of experimental effect. Now, if we think about China, China's often from a regulatory standpoint to digital finance, China is often highlighted as the leading example of a permissive approach. And I think from 2010, 2012, up until 2016, that was a very accurate description. That prior to 2015, 2016, China largely took a sort of hands-off approach to the development of digital finance. And we can really see this coming from two directions. We can see it coming from the electronic payments providers, particularly the ones associated with the big tech companies, Alipay, Tencent, and we can think of it from the standpoint of online P2P lending platforms. So that, in 2016, China had arguably more online P2P lending platforms than the rest of the world. And essentially in 2015, we see a situation where there is a fair amount of turmoil in the stock market as well as in the currency markets. And as a result, we see a decision to change the approach from a regulatory standpoint and begin building a comprehensive regulatory framework for digital finance. From the standpoint of P2P, essentially 2015, 2016 marked the closure of that pilot experiment. And today, from over 7,000 online P2P lenders, there are less than 10 online P2P lenders in China. And that's a pilot. It's a pilot that has been closed down. From the standpoint of the platforms have arguably been incredibly successful in financial inclusion, in efficiency, in platforming innovation, and of course, from the standpoint of SME credit. But similar issues that over the past several years, as the platforms have gotten larger and larger, many of the same sorts of issues about large financial institutions have come up. And I think a decision to increasingly treat digital finance and regular finance the same, and essentially say that take an activities approach, take a risk-based approach, and the bigger you get, the more risks you raise, the more regulation you will be subject to, both from the standpoint of a risk-based approach, but also from the standpoint of preventing regulatory arbitrage, as well as setting a level playing field with the banking system. And so going forward, I think we're likely to see a much more collaborative approach between digital finance and the Chinese regulators, in the same way that we've often seen a highly collaborative approach between the traditional financial services sector, particularly in the aftermath of the 2008 global financial crisis, and the Chinese regulators. And that, I think, is a change in direction from this previous sort of unregulated, highly permissive approach.
Thank you so much. I think that we have the same discussion here in the European Union, because one of the principles that is mentioning all the time by the European Banking Authority is same activity, same rules. And also, if you would like to, if we add, for example, Digital Services Act or Digital Markets Act, we will see that the European Union is struggling to find the right balance for that. Also for the fintech sector as well, because it's the same the same thing here, where not challenger banks, but also fintechs that are not banks are getting bigger and bigger, but they have less stringent rules than the banks, for example, when it comes to the required capital. So I think it's a good point. It's a good point, and I think we need more discussion about that as well. Okay, I would like to ask you about something that is not only related to the fintech sector. It's about artificial intelligence. As you may know, 3 or 4 weeks ago, it was 4 weeks ago, the European Commission proposed a regulation for the artificial intelligence in the European Union. And the main, let's say, part of the regulation is about high-risk AI systems, and also the definition of the AI systems as well. And also the prohibition of certain practices by using the artificial intelligence. So, if you could say something about the approach of China regulators or China itself to the artificial intelligence, and also if you could say something about your opinion about the proposal. I think that it was somehow addressed during the previous discussion about data, but it's just a part of the issue here. So maybe Professor Chalet, if you could add something. and then Dr. Adari, Professor Arne.
Okay. I actually very agree with what Douglas has mentioned regarding data, because for this AI, the big thing is how big data you can use. You can use in as many, if you use as many, much of the data, and then you can get much better results. But the problem is, do you really own those data? Do you have the right to use the data to train your AI system? This actually recently has some big debate in China, because there's one online platform where you can order food, and there are 10 millions of riders based on that platform deliver those food and other things for you. And it turns out this platform are using the data which generated from the riders. So they have this riders record and the route they are taking for each trip. So the rider will always try to find a shortcut. Therefore, they can save some time for delivery and they can get some reward. And the AI system will, using this big data and using the shortcut the rider has developed by themselves, the rider find out by themselves to calculate the shortest time needed. So they keep cutting out, shorten the time needed by using the data, by using the route that this rider has been finding out by themselves. So there's a huge debate, and this data, and obviously the platform are using this data and for their AI system. And but this data generated from individual employees, but they don't benefit from that. Not only they don't benefit, they got hurt because of that. So there are lots of discussions. Certainly, there's no final answer yet. If you ask my own opinion, certainly I don't want too much so-called privacy protection. I say too much. It's not saying I don't want any privacy protection, but too much is hurting. Because if there's too much, they're gonna hurting this AI development. For this example, for this platform example, it's hurting their employee. But there are many other examples. For example, there's some firms using AI to read this X-ray for the lung cancer, for example, and it has performed very well. It beat up 90%. So the successful rate, the accurate rate is like above 90%. So it will solve the shortage of doctor problem in many of the poor rural area, for example. If we don't allow the AI to use this data, which is the accurate data from the patients, and this type of the technology development will way more delayed. So if you ask my own opinion, I think we should still take a more tolerant role in terms of how much data could be used. If it could be used by the AI system to generate a general results, it's not like I using your data and then make a phone call to recommend some products to you, but I only using your data to train the AI. Personally, for me, I think probably we should take a more tolerant role, because there's a trade-off between personal privacy and the development. Yes,
That's true. Yeah, thank you. And also it raises a question about the effectiveness of the GDPR rules about obtaining a consent actually from the users. But it's we would need another 2 hours to discuss this topic. Okay, Dr. Adari, could you please elaborate more on that?
To understand the European context, you have to understand the cultural roots of Europe. So it's a bit like privacy is a bit like inflation, is non-negotiable. It's what led to the to a world war, and then dictatorships or dictatorial regimes in part of Europe. I mean, I'm sure, Michael, you know very well. And Germany is not ready to play with this. And we need to start from that, because challenge this frontally it doesn't lead anywhere. Also because of the kind of governance of Europe, the role of the European Parliament. It's interesting, going back to the story I was telling at the beginning. Ultimately, Google had to walk away from that project in Canada. It was a 5 billion project, losing an amount of not only money, but also reputation. And the question boiled down not to facts, but perception about the potential use of people data. Now, there are some interesting developments, like new institutions like the data trusts. We are looking into those because when you work on urban transformation, that digital layer of the city is the inevitable way. But we need to find a new, really kind of institutions that address, I would say, at least the cultural and institutional concerns in order to protect and at the same time maximize the value. And I've been personally involved in some of those situations. I've seen not only the public sector, the corporate sector not stepping into this field just because they are afraid about the social and political backlash. So in Europe is extremely difficult to move. One project in which I'm involved, for instance, the legacy project of Expo Mine Milan Innovation District, which is a 1 million square meters, 70,000 new, brand new chunk of the city. One of the cornerstones was, for instance, the use of health data. Again, that was scrapped completely, despite the potential value for research and applications for public health. So the approach mentioned by Douglas, in my view, is the only feasible way. So the sandbox concept, where we create a space of experimentation, where the legislator, with policymaker, comes together with the private sector to experiment on new ways that could ultimately benefit the public. So there is also, if you want, it's not just about technology, it's really a political, or if you want, a narrative exercise to explain the process and the ultimate goals. COVID, or if you want, the post-COVID offers a unique opportunity on this. The G20 will host a webinar about experimental regulation on digital finance for public benefit. So those, and it's organized by the FCA, so the financial authorities of G20 countries. It's a signal. It's a signal that something is happened. There is the opportunity now, but it has to be treated with great care and a bit of, pragmatism, starting from this cultural context that we cannot ignore.
Yeah, that's true. And also, if we add that we have right now requirements for traceability, explainability, conformity assessment, certification, and other, it will become a really. I mean, it will be a great challenge for the companies that are using AI, irrespective of the area they are involved in. Okay, and Professor Arner.
I think when we think about this, and I think the key is this, is that there are probably a variety of different ways to achieve the data aggregation strategy for AI. And I think there is a great deal of potential in the rights-based approach, but that requires a fair amount of technological infrastructure. It requires structures that enable sharing of data across a wide range of different participants. But and I think this is one of the key aspects if we're thinking about data going forward. We're thinking about some of the most interesting research. Yes, around AI. I actually think AI explainability research is just as interesting, if not more interesting, than AI research itself. And that's something that we need from the standpoint of actually making use. The third, and I think some of the most interesting technological developments are coming around this, and that is federated data storage and analytic structures. And when we think about federated data storage and analytics, this is something that is becoming increasingly necessary, particularly in financial services on a cross-border basis as we run into ever more data localization requirements. It's also something that is probably central to a more rights-based, or actually even if one wants a rents-based property model for data, where that data is stored in accounts and that data is then made usable for a wide range of different users and participants. These sorts of federated and networked approaches, I think, are some of the most interesting things that we're seeing. And I think this offers a potential alternative from the standpoint of data aggregation in the AI context to those large pooling approaches, either by the private sector or by the state.
Okay, thank you. I hope you will not get surprised because I would like to ask you one more question about decentralized finance. Is it a future, or does it have a future actually? Or maybe it will be like a boom, big boom, and now we are going down with that. Maybe Professor Chalet?
What do you mean by centralized finance? You mean finance
Decentralized, decentralized
decentralized?
finance.
I'm sorry. Okay, decentralized finance. If you're talking about like the DeFi type of the thing, in my opinion, those are the finance try to get away with the regulation. I don't think, yes, it's booming. I think it's not only during this internet stage. Right now, it just give it a new color or a new flame of name. But all the so-called this illegal financing are trying to do the finance, get away with the regulation or do the regulation arbitrage. But in my opinion, globally, in all the countries in the world, finance industry is under heavily regulation for a reason, because this financial industry is very high risk. And we call it, there's a name in the academic, we call it accumulator. So any crisis, if it happens in financial sector, it will have a huge impact compared to other industry. And the so-called systematic crisis is very serious. So that's why financial industry need to be under regulation. So I don't think DeFi, or in another way, you try to do finance without a regulation is the right direction to go. Let me put this way.
Yeah, I completely agree. Professor Arthur?
You know, I think if we look at DeFi, I think it's not necessarily about trying to do finance without regulation. It's trying to do finance largely on the basis of automated systems, and trying to get finance to work without necessarily the involvement of financial intermediaries. And for me, I'm skeptical that it's going to work, but let me suggest what I think, and I just shared in the chat a paper where some of my colleagues and I have looked at these issues. And essentially, what I think we're seeing is in a variety of decentralized contexts is that in order for decentralized approaches to work, one needs a certain level of centralization to support trust in the project. Now, think about this from the standpoint of cryptocurrencies, where things evolving, they're evolving towards central bank digital currencies. They're taking the technology that was developed in a decentralized context, but using it to provide a better state-based system. If we look at something like blockchain, what we're increasingly finding is that there needs to be someone at the base who provides an assurance that the system, the environment operates properly. We're seeing the approach in China, for instance, in the context of the development of the blockchain services network, which essentially is an environment to guarantee that the system will work appropriately. And I think what we've argued, and I didn't share this one, but in another paper with a couple of friends of mine at the Bank for International Settlements, we've essentially argued that for decentralized finance to work, that effectively what you need to be able to do is implement the regulatory objectives into the automated system. In other words, the system, if you're having an automated system, needs to effectively deal with your core regulatory objectives, which is dealing with disclosure to make sure that information is there, essentially policing against manipulation so that there is trust and confidence, and looking for concentrations and interlinkages, which are at the core of financial stability regulation. So I think what we're actually arguing is that going forward, probably DeFi, in order to be successful, is going to have to build in regulatory approaches in systems. And if that happens, we think there is some potential. I certainly agree with Laura that without regulation, it's unlikely that these sorts of systems will either develop the necessary trust and confidence or the stability necessary to be effective alternatives.
So the proposals made by the European Commission within the digital finance package or a strategy is something that we could use, and it's not that bad, because when we are talking with people who are really overhyped with DeFi, they are always saying that you're imposing another regulation, you are imposing another, let's say, requirements. And it's not the way we were looking at DeFi. But okay, we will see, because it's still a draft project. And Dr. Adari?
Let me contribute at least with this perspective coming from what is alternative traditions within Europe that are not big business, certainly not leading forces in the financial markets and in technology, but they are cultural traditions that they go under the tag of ethical finance and socialist finance. They have been existing for 2 centuries. And they responded, they reacted somehow to the mainstream capitalism and industrialization, but they have been growing over the time. The first one, the ethical one, has mainly religious roots, so Christianity in all the different confessions, while the second one is clearly connected to the socialist movement, without being communist, by the way. But in between the two. Now, why are they interesting? Because somehow they have been survived, and then more recently, in the last decades, growing. Some of the best examples, for instance, is a player like Triodos. But there are a growing number of those, in the past we thought remnants of the past, that are responding to the social need of our species. And if we want, the challenge is to see how they can keep alive that need without bringing the state in and marrying with the technological side. There are some very interesting examples. So before you mention digital currency, you know that in Europe there are several alternative currencies which were negligible. Recently, they have discovered the technological dimension of that alternative currency, and they are bringing a very interesting angle, and some regulators are looking at those phenomena as an inspiration for what is now a topic like the euro, digital euro, that I would not discard as a potential development. So what I'm saying is I would keep an eye on those weak signals, which are not part of the main discussion between the financial markets, the technology, and the regulators, because they bring a novel view that could really redesign the thinking and the institutional solutions for the market.
Thank you. So it seems that we are participating in a really big and great experiment with digital finance, artificial intelligence, and other new technologies. So one last general question, and then I'm gonna ask you something from the chat. So the last question is, if you could give advice to the European Union based on your experience in or with China finance sector, what would it be? Maybe Professor Chalet?
I want to hear others' opinion on this first.
Okay, that's fine. Okay, then maybe Dr. Adari again?
Okay. I'm biased. I'm totally biased. So I declare it. I'm really interested in how China will respond to the European taxonomy on sustainable activities. Not because I come from the place where China should align, not at all. I think actually the European Union has a lot to learn from China, from what has been described, this incredible ability to experiment. But I think there is a real platform for mutual learning and partnership on what is a purpose, which has taken a regulatory shape, not defined or finalized yet, because it's certainly, even for the European Union, a process. But it's where I would like to see Europe and China, not to mention clearly the other players, to really collaborate. And I think there is a fundamental role of the public sector, the regulator, to step in, also to encourage, and that is, again, where I am biased, to see a convergence between a purpose-driven economic activities, the sustainable finance, and the technology. Because when we talk about fintech, sustainable fintech, green fintech, social fintech, I mean, the dimensions, the companies, the experimentations, the investments are still very negligible compared to the main sector. While in my view, that is where we can really bring all the parties together, because there is a public and private values alignment.
True. Very good point at ESG, because even if we have a regulatory and legal framework for ESG and sustainable finance, we are still learning right now. So maybe we could learn something from China as well. And Professor Arner, if you could say something about that. One advice.
Let me take two sides. One, I think I very much agree with Filippo's point, and I think we're seeing a really interesting and very rapid evolution in ways that we think about sustainability in finance. Just 5 years ago, even just applying a risk-based approach to thinking about sustainability issues would have been a sort of out of the mainstream view. And today we see central banks almost in agreement, at least on that point, that looking at sustainability as a risk and trying to build frameworks to address it. I think increasingly, though, we're actually looking not only from the standpoint of risk, but also thinking about how can we go about actually building or supporting financial systems that actually have a positive impact on sustainability. And I think this is one area, as Filippo has mentioned, where COVID is having an important impact on the way that a large number of people think about things. And I think that digital has a very important role here, particularly from the resilient infrastructure side, but also from the standpoint of enabling essentially more financial resources through inclusion and also allocation of those resources more effectively from the standpoint of sustainability. So I think that's a really important aspect. And I think it's something that it's very good to see that China, the EU, the US are beginning to discuss. And if anything, that is one area where there seems to be some consensus. From the standpoint of China's experience with digitization of finance, I wanted to really pick up two aspects. The first is on the positive side. And if we think about SME finance. Over the decades, we have tried many different approaches to SME finance. And if we're honest, none of them have really worked that well. But the sort of data aggregation approach, which has been used by Ant and Tencent, but also Amazon in the United States, where they are building up massive amounts of data, and they are using that data in order to automate analysis of lending decisions to individuals and SMEs, both on a cash flow basis, but also on a range of wider reputational factors, that I think this is something that a number of studies from both colleagues here in China, as well as elsewhere, have shown has worked. This has been new lending, not lending that is diverted from the banking sector. And so this idea of data-based lending to support cash flow and reputational analysis for automated lending to SMEs is something that has a great deal of potential. The question is, in the context of Europe's more rights-based approach, is will open banking, open finance allow this to happen? And at the same time, from the negative standpoint, I think China's experience highlights the risks that can emerge from the standpoint of economies of scope and scale and network effects in finance, where you can have emerge very large dominant players, which, as we're also seeing in the United States, begin to actually restrict competition and innovation. And so this highlights the need to be aware that in the context of digitization of finance, there are both opportunities, and I think some important ones, particularly in SME finance, but also from the standpoint of risks. And I think these issues about balancing the benefits of data aggregation with risks of financial sector concentration are key.
This is a good point. I think that last year there was a publication by Bank for International Settlements about the automated credit worthiness versus, let's say, manual credit worthiness, and the conclusion was that the automated solutions are much more better, right? I am the one who is really looking forward to see a credit worthiness process based on Facebook data. Actually, that could be interesting. That's the one thing. Actually, I mean, it could it could boost financial inclusion. Okay, but Professor Charlet, what's your view on that?
Okay. Actually, I add a little bit about what Douglas just discussed about this data-based lending. And everybody know, and even the regulators or the practitioners know, this data is really useful, and it's owned currently, for example, by different institutions in China. Tencent has many data, and Ali has many data, and the regulator has thought about to put them together. And if we could put all this data together, and we will form the best credit score, for example, for individual, and then there's lots of financial activities could be carried on after that. But the problem is, so they formed a company where Ali and Tencent are all 1/8 of, there are totally 8 institutions as a shareholder, and has this company. The initial idea is hoping this company, this shareholders can put data together, and then we can have the best credit score. But eventually it didn't work very well because none of the shareholder willing to contribute their data, because if you're thinking about this data as assets, this is a very important assets, and you're 1/8 of the company, you don't want to pretty much give up your data. So talking about this open bank, the approach where European is trying, is it possible we force those firms to share this data? Actually, there are some discussions on that, some proposal and some debate. Is it possible we just force those firms, for example, Ants Financial, to share the data? Lots of objections, obviously. I'm not saying the proposal is from the government. I'm just saying about the scholar stuff and the debate. So the one issue is that this data are not fall from heaven. And actually, as financial or Tencent, they spend lots of efforts to collect this data. And there's a lot of innovations building in, or a lot of value added by this firm. If you're forcing them to share their data, and then there will be no, for example, if they don't get any benefit from this data, and then they will have no incentive to keep collecting data. And this is, like I said, is not fall from heaven. There must be a lot of innovation, a lot of efforts, and lots of value added on that. And if they stop doing this, and data has a very high depletion rate, the older data are not very useful, and we need the most updated data. So that's kind of the challenge for us. We want them to share the data, but because they are the one adding value on that, we still have to keep their incentive. I think right now, all the parties are still exploring and trying to find the best way how to solve this. What is the best way to solve this problem, to deal with this pros and cons of the data issue? I think that is the key.
Thank you so much. Thank you for your thoughts on that. I would like to sum up, and then we will come to 2 questions that we have in chat. So, even thought we are talking about fintech, about digital finance, we are talking about data. That means that we are living in the age of data, and I think that from regulatory perspective, legal perspective, and cultural perspective, there is a lot of work to do, actually, to make more access to data, make more open data, and also to educate people about their data and the possibilities it creates. So I think fintech is more like data film or something like that. Okay, so let's jump into chat. We have 2 questions actually. One is from Joanna Kornas. I'm gonna read this question. I've got a question about digital smart cities which are already developed in China, such as Xiong'an. and potential fintech applications. Are there any strategies, plans, or just legal possibilities to give private companies, for example, fintechs, access to data processed with such cities in order to use the data in fintech business? Would such use be possible from the perspective of Chinese law? Who would like to answer to this question?
Okay, I could contribute to what I know about the current situation. It's not just about this digital city or smart city. The question is can be more generalized too. There are some data collected by the government. For example, your tax record and how much or by some so-called state-owned enterprise, the gas fee you're paying, the electricity fee you have to be paying. So, for example, right now we are scanning, and globally we are scanning this health code. So you go everywhere, and then this is so you have a QR code to keep whether you ever go to the place which is a high risk due to this pandemic thing. So all this data are collected by the government department. So whether a private firm can use this data or not. Right now, probably Douglas knows more about law. To my understanding, there's not clear written to see you can use it to make profits. I don't think it's written you can or cannot. But certainly, I know there's some kind of the way this private firm has trying to, or right now they are using the data because, for example, if they provided some service for the government and then they get access to the data, and because once you get access, your source will get a copy. It's very hard to enforce you not to use the data. You can use data to, as long as you don't making phone calls to individual or something, and you using this data or AI or whatever, develop your own product. It's hard to prevent once you provide some service, once you put your hands on this data. So that's kind of what happening current stage. We haven't has a written rule yet how to make use of this data in terms of the legally, whether they can pay to use or not. The problem is it's unclear about who owns the data. For example, you go to the hospital and you have a digital transcript, or for example, to doctor shows give you the medicine. So who owns that? That's so useful. And I know some companies have been using that to develop, for example, new drugs, etc., new tablet. But who has the ownership is still very unclear. So I would think this is a very important question. It's not just restricted to digital city or something. It could be generalized to all types of data has been collected by the government department, whether we could use it or not. Currently, if you use it for non-profit purpose, which is fine. I develop an app to help the citizen to achieve something for non-profit purpose, which is doable. You could use the data. You could get access to the data. And now currently, what has happening is those companies, by providing this so-called non-profit service, and they get access to the data and they make use of that, but they don't we cannot make announcement I'm using the data. They just use it privately. I think that's the current situation, and it is indeed a very, very important thing. We have been talking about what we should do, or we should come out with some laws or at least regulations to separate this data into different categories. So give the business some guidance about what they can use and what they cannot use. Yeah.
Thank you. And before jumping to Professor Arner, there is one question that is related to what we are talking about. I have a question about data protection in China. What are your views on China's new personal information protection law? Is this China's answer to GDPR, especially in the context of the similarity to the high penalties that this regulation also provides? Do you foresee a sudden panic among companies in China like happened in Europe after the introduction of GDPR? So, Professor, if you could add something.
Yeah, I think it's important to realize that if we look at, say, the US, EU, and China, each is developing different approaches to data in two different contexts. One is private sector use of data. The other is government use of data. And if we think of the US has been, until quite recently, very comfortable with a property-based approach to private use of data, private sector use of data. That's enabled Facebook, Google, Amazon, etc. But very reluctant or very adverse to government use of data. If we look at the EU, as I think Filippo has highlighted quite well, is concerned about both private sector aggregation of data as well as government use of data. If we look at China, until recently, China has been very comfortable with private sector use of data, like the US, but also very comfortable with government use of data. And I think what is interesting to see in China is that for a variety of reasons, both public as well as government, China is increasingly concerned about the way that private firms use data. And in particular, the way that a relatively small number of firms have access to a whole lot of data that then they use to an advantage. And we can see a number of healthcare providers in this context, as well as financial services, telecommunications, e-commerce, social media, the whole sort of spectrum. And if we think about the new, and there's a whole range of data-related rules and legislation that is coming out in China, one aspect is very much towards policing the use of private sector data. In other words, setting rules, giving individuals more control over their own data, restricting the use by private companies. And so, in many ways, the directionality is towards a more GDPR-based model, though not an entirely rights-based model, still with a fair amount of a more property-based US style on the private sector side, but without the sorts of limitations that you would see in GDPR around state use of data. So I think what one has to do is one has to realize that, yes, it is China's version, but why China is doing things is not necessarily the same reason why other major economies or societies are doing things. And as a result, the approach is different.
Thank you so much. It was a great overview of the data protection issues and law. Dr. Adari, would you like to add something on this topic?
There would be a lot of to say in the, if you want, a cultural and even philosophical point of view. I always, when we talk about these things, mention Plato about the introduction of writing. And despite being a great writer, Plato wrote a lot about the conceptualization and the social political implication of writing as also a potential risk. What the point I want to make here, we are not talking about just about innovation and technology. We are talking about a major transformation about how we organize our society, and it's not just a discussion for technologists. And this is how it should be addressed. And that is, in my view, why it's so interesting when you contextualize the issue within the transformation of the city, because it's like a living lab. It's a dimension to which everybody can relate to, and at the same time is a gigantic experiment where we can try solutions, bringing the parties together. Now, very recently, I love always case studies, especially because they are a way to understand through phenomena how the debate, the issues evolve. Very recently, 2 weeks ago, central government, Westminster, stepped in a public procurement process run by two minor local authorities, because they awarded, I don't mention names, Chinese tech companies a contract to develop the local digital infrastructure. Westminster stepped in. If I find it, I can share the link. Stepped in and stopped the normal procurement process on the basis that those Chinese companies, no evidence, but just the suspect that those Chinese companies could have abused their access to public data through the creation of the infrastructure for public services, banal stuff like public mobility of users, citizens. Now, that simple local provincial fact is revealing of a trend, in my view, and also worrying, since it's happening in one of the most liberal countries, at least I would say in Europe, so I don't want to expand. And so we need to pay great attention to this relationship between the public data, public sector, private sector, West and Europe. I've never told about the US in this debate, but it's actually a triptychon. So it's, as Douglas mentioned quite rightly, it's US, Europe, and China. And I think that the cities and the building of that new digital infrastructure provides a unique opportunity for experimentation. But rather than letting happening, because this is what's happening, there should be a joint effort for probably coming from platforms like G20 to run joint experimentations. This is what I would recommend. It's bold, but why not? I mean, we live in exceptional times. We need to take exceptional new measures.
I completely agree with Dr. Ardari, because I think it's all based on trust. Even China would have a really comprehensive, almost GDPR, let's say, legal framework. Without trust, we wouldn't be able to build a cooperation. That's my view, actually, here. So just there is one more question here, but I think it was at least partially addressed during our debate, but still I'm going to read that. I would like to go back to the COVID issue. How strongly did COVID influence the development of fintech in China? Was there a noticeable moment of big acceleration during the pandemic? Things like remote customer onboarding, remote authentication, did banks already have this solution developed, or did they suddenly have to introduce them into their services? I think this was a case also here in Europe as well. Who would like to answer to this question?
And I'll jump in and sort of generalize that. In China, many of these things were already present. The sort of ubiquity of smartphones, of bank account availability, of electronic payments meant that essentially the framework was there to support a sort of ongoing digital life while the society was completely locked down for an extended period. That's a contrast to many other places where many of these pieces were not in place, and the necessities of lockdowns in COVID have driven things forward. And I wanted to go back to Filippo's point that I think what has emerged, and we knew this before, but COVID has really reinforced this, that it's a combination of sovereign digital identity frameworks, interoperable electronic payment systems, and account access, bank account or mobile money access. And if you have these pieces, as China did at the start of COVID, it makes dealing with a sustainability crisis or any other crisis where you need to get resources across your population, it makes it relatively straightforward. It gives a tool that supports not only addressing the crisis, but provides resilience in the face of crises going forward. And I actually argue provides important infrastructure from the standpoint of building more sustainable financial systems and economies more generally. So I think it's these points that we've seen driven forward by COVID, but probably less from the standpoint of China than a lot of other places.
Excuse me, I cannot see you actually. Do you hear me?
Yes.
Ah, okay. I don't know what happened. Does anyone would like to add something to that?
Well, if I made up something, I would think a strong influence of COVID on the fintech related industry is the remote education, things about related to education, online courses and training stuff. And the point that they mentioned here in the question, remote customer onboarding, remote authentication stuff, has started even before the pandemic. And I don't think their development was hugely affected by the pandemic either. I think all the banks or all the firms have already noticed how important it is, has tried their best to develop it already. But on some other industry, as I mentioned, the education stuff, and before it's always offline. And the industry haven't thought about or the possibility of moving online. And this COVID is really a big shock on that. Yeah, I go.
My comment would be anecdotal, so take it for what it is, but from the person in the street to the policymaker, I noticed a change of consideration towards the Chinese role in fostering innovation, not just for China, but globally, and innovation, and not just technological innovation, so also the intertwine between innovation and government and institutional transformation. For the first time, I've seen, I would say, a diffuse understanding that there is an emerging alternative, I would call it, at least, not just a global power, but really as a sort of gigantic experiment, and looking with interest in the choices made. And I think this is refreshing. I would take it at least as an anti-Trumpian approach. So it's refreshing because it makes our world richer, and it can inspire and widen our spectrum of possibilities. And the fact that is not limited to scientists and policymakers, but also the person in the street is looking at this, thinking at this, is, from my point of view, beautiful, just beautiful.
Okay, so can you hear me?
Yes, we can.
Yes, great. So as we don't have any further questions, and if you want to add something right now, we also have time for that. But if not, I would like to thank all of the speakers for devoting their time to share their knowledge.
Just a moment, Małgorzata.
First. Yes?
Hello?
Yes, we can hear you.
Okay, I had some problems with the website. I would like to just to sum up, if you don't mind. So I think that we have a lot of things to learn from China, but also European. I mean, as a European Union to learn from China, but also China could learn something from the European Union at one point when it comes to not only fintech but also about the data protection and other let's say implementing new technologies. And I think it will be a long process. It won't be a revolutionary in 1 or 2 years actually, because we have to decide at the policy level actually about the approach we would like to take to become a leader or one of the leaders actually in, for example, artificial intelligence and emerging technologies, and also to create a legal and regulatory framework. And if we add that we have a really, let's say, a big challenge to educate people from the beginning to the end, let's say, it will be a really great challenge for all the policymakers, all authorities, and also the private sector as well. So thank you so much for the discussion. I think it was fruitful, and we'll get back to our homes, let's say, with a really fresh, let's say, view on how emerging technologies are changing our lives, actually. So thank you so much.
Yes, thank you. I thank you once again. We are very delighted that we can have you as guests. And I think I can say that we learned a lot. On behalf of the organizers, I wish everyone a good day or a good evening, and also encourage you to follow our social media so that you won't miss any of the upcoming events. Yeah, so thank you all for the discussion, speakers, listeners, and people who asked the questions.
Thank you so much.
Thanks,
you.
everyone.
Bye.
Thank
very
you.
much. Thank you,
Thank-
everybody. Goodbye.
Goodbye.